All right, Mike, let's start off by saying Happy New Year to everyone. And I hope everyone enjoyed the holidays and now we're all back to work. So
Yeah.
yeah, exactly. Right. So we've got a new topic here today that we wanted to share some information on. One that we've been getting a few questions on here and there. We're seeing a lot of it on social media. We thought that you might be seeing it too, and that's about the opportunities around assumable loans. So whether you might be looking to sell your home, we thought we would just get some information out there to you and see how we might be able to help. So maybe let's start off with Mike with what is an assumable loan?
Yeah, whether you're selling a home or whether you're trying to buy a new home, right? It is definitely a topic that was very popular on whether it's TikTok or social media, because it's one of those things that almost like sounds too good to be true, right? Everyone was trying to find a way to get around a 7 or an 8% mortgage. And so the way an assumable loan works is that when you are purchasing a property, you as the buyer are looking to assume that current seller's mortgage. Or if you're the seller, you're trying to let that buyer assume your mortgage, meaning they are taking over your interest rate, your loan balance, where it is today, and they're taking over that mortgage payment. And it sounds great, right? Like it's a way for buyers to get that 3% rate that you have and not worry about the 8% interest rate. But of course, with anything that sounds too good to be true, there's a lot of strings attached, and whether it's pros and cons, we want to kind of break that down. But in a nutshell, right, you are taking over the mortgage on the property at that current loan balance.
Exactly. And these types of loans have been around forever. As long as I've been in the business, an assumable loan has always been an option. It's something that, Mike or I, we wouldn't be involved in at all. Everything is dealt with through the servicer on your mortgage, on your current mortgage. So we're not doing a new loan. We're not doing anything like that. So any loan officer like Mike or myself, we never really get involved in these, but we do have the information and wanted to, get this out to you. So, um, not every loan is assumable. So it has to be an FHA or a VA loan currently. So if you have that, or if you're looking to, considering yourself maybe selling your home and buying a new home, you would have to be assuming a seller's home that has an FHA or a VA loan on it.
Yeah. And one thing to look out for. So when you purchase a property, right, you receive something that's called a loan estimate. So, right, you're looking at this in terms of your property to figure out whether your loan is assumable by someone else. Right. On your loan estimate, right, it's on page 4 or 5. There's actually a box that'll notate whether your loan is assumable or not. And this comes about in multitude of factors. Now, the hot topic is, right, when you're selling your property, letting someone assume that loan, but it comes into equation in other times, whether it's potentially there was a death, whether there's a divorce. Depending on your mortgage servicer, sometimes they allow for that loan to be assumed by another party. So not just the case of selling the property. That just became prominent because of how to get around high interest rates. But there's a lot of vehicles for this to be used when you're having the mortgage that is actually assumable.
Exactly. And as a seller, so if we're looking at this and thinking like, okay, as a seller, how do I make this an option for a buyer? Because obviously a 3% interest rate is much more attractive than say, interest rates today are somewhere 6 to 6.5 to 6.75, something in that range, on a government loan or an FHA or VA loan. That 3% mortgage sounds much more attractive. So, one thing that you as a seller, if you were entertaining this, are looking at is like, okay, this sounds like a great idea, but the buyer's taking over my loan, but you want to get the equity that you have built into this property. You need those funds so that you can move on and purchase the next property that you're looking to buy. So Mike, talk about that a little bit. Like we have some programs that will help with that, and maybe touch on that.
Yeah, because right, that's the key here is that you're only taking over what is existing on the mortgage. So if there's only $300,000 remaining, that is all that's being taken over. So for example, let's say the home value today, right, it's appreciated. The home is worth now $600,000. Well, there has to be a bridge, right? You as a seller are still looking for your equity, or the other seller that you're trying to buy, they need that money, right? They're not just allowing you to take over this new mortgage at whatever balance, it's only for whatever's existing. So there's a couple of things, right? You can come up with the funds, right? And come up with the larger down payment to take over this mortgage, which is definitely an option. Now, in today's market, right, most home buyers are putting anywhere from 10 to 5% down, right? That's the average down payment. So how do we get around that? Well, there are second mortgage products where you can bridge that difference. So let's say you have a $600,000 purchase price, a $300,000 loan balance. So you're trying to come up with, say, a $200,000 second mortgage to bridge that gap and get that seller their equity.
Or
To keep in mind is that most of these second mortgage, right, they're higher risk. They're in second position on this property. They need to be approved by that first mortgage that you're assuming. And sometimes, and most of the time, they are at a higher interest rate. So what we have to take a close look at is, okay, what's the blended rate here, right? I may have a 3% rate on this balance, but if it's a low balance and a 10% rate, say on a higher second mortgage, well, it might negate that benefit of that lower mortgage, and you may be better off with a 6% mortgage at a total balance, right? So a lot of factors to be considered when you're looking at that second mortgage as an option. But it's nice to know there is an option.
yeah, and you're kind of talking about this from, hey, if you're a buyer and you're looking to buy, but if I'm a seller and I'm selling my home, like I've got this 300,000 in equity, I want my 300,000, right? So this is an option for the buyer of the property to be able to go out and to get this second mortgage so that you can be released from this mortgage. You have the equity that you're looking for so that then you can go and buy that next property. So there are some time constraints that come along with this. So, and there's some, as Mike mentioned in the beginning, there's pros and cons to this. And, sometimes these programs can take a couple months to, get this second mortgage in place so that you can get those funds to either one, be able to buy the home, or two, be able to sell the home and purchase your new home. So these can range from, depending on the servicer. I can tell you that in my experience over the years, these have always taken a long time to get through the process. And that's always been kind of the stumbling block here is, who has 6 months or 7 months or 8 months to wait? Like neither the seller or the buyer wants to go through that heartache. So these programs sometimes get, stopped because of that. But now FHA stepped in where there's some, stuff that's happening now with this high interest rate environment that we've been in, where it's sped that time up. But this is not your traditional 30-day mortgage closing where, when you purchase your home, that you're going to see on these assumable loans, because it does take some time. It does take some time to get that second mortgage in place as well.
Well, and I think that's the key is where do you live? What's happening in your local market? Because the marketability of the program, the reason why it came back in play was, right, homes started to sit a little bit longer. Not that we were in a seller or a buyer's market, but we were kind of starting to get to that gray area. And the reason being of, okay, well, sellers were looking for more ways to attract buyers to their property. Well, when the script flips of what we're expecting to see in 2024, right, is interest rates starting to come down. Well, it may not be advantageous for a seller to offer this because they want someone to come in and purchase the property and close in 2 to 3 weeks, right? They may not need to offer this to a buyer, right? Because at the end of the day, there's not quite an incentive for the seller doing it, right? They're walking away with their money one way or the other. It's just a matter of, could they market this to more people to help their house sell quicker? Whereas, hey, if there was no one looking at their house and it was going to take 4 months, well, I'd rather do this, give a buyer a good deal, and it takes me 4 months to process the loan or let it sit on the market. Well, that really depends on where the market goes for your local neighborhood and if this is really needed to help sell a house.
Yeah, because what we find is it might not, when you take into account that blended rate, you've built, the seller's built so much equity over the past couple of years that, this 10% rate at a high dollar amount, it really does affect what that blended rate looks like. So, could we do just a traditional first mortgage and have a rate that's comparable, I do believe we're headed that direction, and I think we could. So that's one con. Like, hey, it's out there. We need to talk about it. The other one is there's another con to it that could be not from the seller standpoint, but maybe from the buyer standpoint is, FHA changed their mortgage insurance rates in the middle of last year, Mike, middle of 2023. So, and it actually decreased. So a mortgage that a buyer might be assuming might have a higher mortgage insurance premium on that, and they might be paying a little bit more. The goal here, once again, that buyer's real incentive here is that 3% interest rate that you have, or 3.5 or 4, whatever it might be. So something else to look at, but that really is dealt from the buyer standpoint. So we're kind of flipping back and forth a little bit here, talking about you as a seller, talking about you as a buyer, but those are some things that we would be looking at to help you.
Well, I think the key here, right, is to debunk sometimes things that just ultimately seem too good to be true. And it's not that there isn't a market for this, because there is. There are assumable loans that are happening at a much higher rate than ever before. So servicing companies have adapted to that. But really, it just depends on the exact scenario to know if it's beneficial for both seller and buyer. And the important part is to use us, even though we may not be involved in the Assumable portion of it, in the processing of that, because the servicing team is. We would be a part of the second mortgage process, right, to bridge that gap if we're an option. But really, we're here to give you all options, whether it's beneficial to you or not. That's our job, to break it down, to figure out, an Assumable loan works or doesn't work. I know it's easy to get lured in of a nice TikTok video that's like, you can get a 3% mortgage rate. Well, yes, but some strings attached to it.
Yeah. And like Mike said, we're not involved in it, but we're here to help you, make sense of that, whether you're thinking of selling or you're thinking of buying. So we can definitely help you. So we look forward to answering any questions you have around Assumable loans. I'm sure you've seen it. So I hope that this helps you. And, as always, we want to be bringing some value to you here, and hope this is bringing some value to help you answer some questions when you're kind of deciding what's happening. Hey, we are seeing interest rates come down. We do feel very positive about the market here in 2024, and look forward to continuing to bring these videos to you.
Yeah, definitely send us an email with topics that you feel relevant that are pertaining to your house, because we'd love to expand this and get you more information.
Absolutely. So look forward to seeing you on the next one. Thanks so much for watching.